few investors that you've worked with, another point I want to bring up, they've come back and told me that they've refinanced, and not only were they able to access equity in their home or put a line of credit on their home, but their payments actually went down. How did that?
Well, you can stretch back out amortization. Amortization is an important thing for investors, especially on rental properties. Don't be scared of things like a 30-year amortization. That can help, extend obviously your cash flow, right? The lower the payment, the longer the amortization. Again, things we'll talk about in the masterclass, how we can offset the higher interest, because on a 30-year am, we're going to have a higher interest payment, which isn't necessarily a negative depending on what the accountant says. So there's different strategies for sure, but certainly lowering that payment, 5 years into a mortgage, you're on a 25-year am. Well, you set that amortization back to 30 years, depending on the rate, you could have yourself a lower payment and the cash in hand.
Yeah. And if you had a rate at 2.8 and now you're going down to a rate of, what would you guys get me? 1.6 or something?
Yeah. Anywhere between 1.5% and 2%, just depends on the lender. Lenders vary.